Like YouTube trolls when things don't go their way, the bears pull a vanishing act at the close. Will they come out of hibernation? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that we needed to see the bears follow through if we were going to see a move down, and the bears tried to sit on support all day long before getting wrecked at the close, where the bulls took it back to the high of the day. Now the question is, can the bulls follow through? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, kind of a wild close, so let's jump into the chart and take a look. Okay, guys, so here we are on the 15-minute futures chart, and I am zoomed in today on Friday. If you want to see a bigger picture update of what I'm talking about when I start to expand on this formation here, you can check out Monday's video where I go over my big picture stuff. Every Monday, I tend to give us a big picture update, and then throughout the week, I kind of drill down into the smaller time frames. So what we're looking at, guys, they needed to follow through, the bears. And they came down and they tried very hard to follow through. They sat down here for quite a while on support, pounded on it, could not get through. And then right at the close, about 30 minutes before the close, the bulls showed up and absolutely crushed the bears, taking it back to the high of the day at the close. So the bears were unable to fully follow through. Now, that doesn't mean the bears are dead, and it doesn't mean the bulls are going to the moon. It just means that we failed at support, and until support breaks, pressure does remain up. I know that probably sounds like a broken record. And essentially, since Tuesday of Thanksgiving week, we've traded in this range here. You can see we went to the top of the range, spiked down to the bottom, spiked above it, poked below it, back to the top of it. So it's trading in this range. It's telling us this area is pretty important, but especially the support area is important. They've hit it three times. They hit it here, here, and here, and the bears have been unable to get through on any occasion. So this area here is going to be our first level of support they need to break. And remember, this was not a break today. This was a poke. So the difference is support, okay, is going to have some people just above it buying. It's going to have some people right on the number buying, and it's going to have some people just below it buying. So you can come down and come up short of support and the buyers come in. You can hit support exactly and the buyers come in, and you can get past support a little bit and the buyers come in, vice versa for resistance. And so when they poke it through and then you get a strong reversal like this, the buyers were sitting just under support to kind of lure in the bulls, saying, hey, support broke. Then they trap lure in the bears. They trap them and then run it up. So we did not break support today. We poked it. And what you want to do when you break support is you really want to get through with some momentum. You would have liked to see them come down and hit 45.37, which is our next level of support, 45.38 essentially. You would like to see them hit that level, bounce back up, back test this support area, and then break down. Okay, so they did not do that. They poked through, did not break through, and that's the difference. There are times in Elliott Wave where things matter, like the pivot to the exact penny, but support and resistance in general do not matter as far as to the exact penny. It is you're looking for a clean push away from that area and then potentially a back test, not always, but potentially a back test and then another breakdown. So anyway, back to the count. Just a quick technical lesson there. Back to the count. If the I'm backwards today. If the bulls are going to follow through to the upside, they do have a nice three waves up, a 1, 2, and then the explosion higher to the highs. And they're kind of failing here off of that level, which you've got resistance here across. They've traded to the top of this range a bunch. If they fail here and hold the support area, which would be in this 45.70 area, we would look for them to push up to make another high. And this would conclude the C wave of the A leg, and then you'd get a B leg, and then C leg higher to complete a diagonal. And in that case, what would happen is both fives would just move over, all these fives to there. The 3 would move over, and the 4 would come over to this level here. And we would just have a bigger diagonal on our hands. So it's not impossible that they make a new high, especially to start a new month. That aligns a lot with what they do in a bullish count, in a bullish situation. Start the month off with a bullish candle. So it's not impossible for them to come up here to the 45.16 area. 45.15.16 is where we'd look for the bulls to target if they're going to go higher. And essentially, you'd want to see them break back over the high they made at the end of the day. This wave 3 high and this high that they made here at about 45.80. You'd want to see them break over that to kind of signify that they're going to come challenge this high and likely take it out. So that's what the bulls would be looking for to the upside. Now for the bears, they had a chance to potentially put together an impulsive move to the downside, and they failed at that. And what we have here is a pretty clear three-wave structure. They only hit the 764 on the way down, so it's a little bit of a muted C wave. It's a perfectly fine target. Typically, you see the 1.0 and the 1236 as your main targets, and the 764 is kind of a more secondary target. But they did hit the 764 and poked through it and failed, ran it back up and made a new high. So you would have three waves down for A, this move back up for B, and then you'd look for a C wave down. And currently that C wave down would target 45, 37, 35. And so what we would be looking at with that is our 45, 38 area we've been talking about. So that does make sense for them to want to come down and test that support area. And then you get a little bit of a bounce, as I said, and then continue to the downside if the bears are going to play this out. And then the other option is, because this is a diagonal, we do get a lot of straight down selling. And so when you come down to support the first time, you can see a bounce, and then what you see is kind of a smaller A, B, and then an elongated C wave that would come more directly down toward the 4,500 area, and a direct move of selling to retrace the diagonal structure that we have from back over here off of this wave 4 low. So if they break support, it would not shock me to see them kind of roll through 45.38 and really start to sell hard back towards 4,500. And then at that point, we'll have to see if they break that level to continue to the downside, which would lead us to probably a waterfall towards 44.30, or if they give us a small bounce here and then continue the move down. So the bears really need to kind of hold where they did today, that 45.80 area, and push down pretty aggressively at that. Obviously breaking today's low, or yesterday's low, Thursday's low, and this whole line here that I have drawn across, breaking through that is the first thing the bears need to do to get the ball rolling. And then 45.38 is the next level to watch. Over on the NASDAQ. Okay, so on the NASDAQ, one thing that I thought was interesting, and this, by the way, is the 1 hour chart on the NASDAQ. One thing that I thought was interesting was the NASDAQ participated in the rally at the close, but not nearly as strongly as ES. And RTY was also kind of muted in that rally. ES was very strong, and these two, they went up, obviously, but they did not go up like ES to new highs. You know, the NASDAQ did not get back up to where it was, and it actually pushed through its support by about 50 points. So it kind of broke through its support, its upper support, 15,900. Then I said we got to get through 15,800 next. And the reason is you have this whole support block over here, and it's also your kind of wave 2 low, which is what you're looking at. But this 15,900 to 15,800 support block is what they need to break. They got about halfway through it and bounced at the close. So not uncommon to see a bounce out of that support, and now they're coming back down a little bit off that closing push here in the after hours. We'd like to see them go ahead and push down through this. And the NASDAQ did give us a pretty good looking A, B, C, where they hit the 1, 2, 3, 6, pretty common target for the C wave. Then we'd look for probably, I mean, they're high enough here that they don't have to continue higher. They're high enough on the bounce that they made, but they could continue a little higher to make it a little better of a structure. And then we would look for continuation that broke through here. And then I think if they break this low, they'll break through 15,800 pretty directly. And then the NASDAQ would target the 15,586 area next, which is the top of this next area. This is the CPI gap up that was so big. And there's nothing really in here to catch a falling chart. So if they do fall through that, I would expect them to kind of accelerate down into this 15,586 area, which would be the next level of support. So if the bears are going to follow through, they did a good job today on the NASDAQ. They just need to kind of hold below this high here at 16,099 and then push down below the low from yesterday. If they break that, I think they'll break the 15,800 area, and then we would look for them to push down into this 15,580, 15,600 area next. For the bulls, we could have a deeper wave 4 here, where this was 4 down, so you have an A, B, C for 4, and then you'd be looking at a 1, 2, 3, 4, 5 up to give us a little higher wave 5 up toward that 16,250 area. And that would be our next target higher for the NASDAQ if that's what we're looking at. The overall pattern is corrective to the downside, so it could potentially lead to another high. But we would expect that corrective pattern regardless, because even in the more bearish count where we're looking lower, we're still looking for a bigger ABC, where the A wave comes down into the 14,500 to 14,600 area, whereas wave 2 would come into the 15,200 area on the NASDAQ. So NASDAQ a little more bearish than the ES in the short term, not in the long term. In the short term, a little more bearish and would expect more follow through to the downside. And so If they can break this low, we would look for them to break 15,800, but the bulls again would need to push back over this 16,100 area, and if they do, they would at least challenge this high and most likely break it toward the 16,250, 16,300 area. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial because I want you to get in there. I want you to make sure you love it and become part of the trading team before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners online course. This course is helping real traders make real money and finally understand the market in a way that makes sense. It doesn't make sense when good news makes the market go down and bad news makes the market go up. Because quite frankly, the news doesn't matter. Elliott Wave gives you the key levels, the support and resistance areas to watch and trade off of so that you can understand what's going to happen before it ever happens. This course is 25 videos in 3 sections where I go through the introduction, we go through your expectations, your emotion, the KISS method and why it works, your chart setup and tools where we go through every single tool you need to use with Elliott Wave Theory and how, and the Elliott Wave for Beginners course where I go through each of the Elliott Waves, how they work, what they look like when they succeed, what they look like when they fail, and how to chart their patterns. I go through the theory of alternation, the corrective depth theory, the pivot, all the things that you need to know to finally make sense of an irrational market. The really cool thing, guys, is if you don't want to pay the $67, I completely understand. And that's why if you become a monthly member, you get the Elliott Wave course for free. In my first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where we go through exactly where we are in the counts and what to expect, as well as the Elliott Wave for Beginners online course. We trade the SPY and the QQQ, and we swing and day trade, which means we trade quite often in my room. And if you're looking for futures trading, individual stocks, and advanced training, you might want to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures his trades that's so unique. It's something you kind of have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, averaging 3 to 4% gains per week, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, our key takeaways for today. For the bears, they need to push down and break this low. It would likely be a C wave. The initial target would be that 45.38 area, and we'll see what we get. We could see a bounce off of that support. If they do break through that, I would expect accelerated selling down towards 4,500. For the bulls, they need to push back over that 45.80 area that they topped at. If they push back through that, we would expect them to challenge these highs toward the 46.15 area. Over on the NASDAQ, a little more bearish than the ES. We have a pretty clear ABC down and a bounce. They can push down from here. The next target would be that 15,800 area for support, but I do think they'll push through that if they get there. And if they push through that, we would expect to see them push to the 15,580 to 15,600 area. For the bulls, we'd want to see them continue up, take back out this 16,100 area, and then push back over the highs toward the 16,200 to 16,250 area. Guys, it's the weekend. Have yourself a drink, get out of the house, spend some time with your family, and I will talk to you next week.